August the 26th, and we are live with another edition of Chart the Markets. I'd like to thank our good friends at FEG Token, fegtoken.com, smartdefi.com, and of course BitFi Exchange, BYDFi. They're our exchange partner, and if you don't have a BitFi account, all you have to do to get that link is check my X profile or my YouTube profile, which is at BluntHouseTA, and you'll find it in the description. And I really want to kind of get right to it today because there's lots going on, and we like it when there's lots of activity. And one of the things that we always talk about is how current price revisits past. And for those of you that have been with us for a while, what you're looking at now is a 4-hour Bitcoin chart that goes back, quite a ways. And we had connected levels that we saw materialize on this 4-hour chart. And as time went on, we continued to identify levels. And those levels were what? Basically connecting tops and bottoms of past price, benches of past price. And when you're doing it, you don't necessarily understand why it's going to be relevant. But you know it's going to be, because we know that current price revisits past. And our job is to monetize the chart, right? We have one job. I'm going to run this here just for a second. This is the 4-hour. And let's just watch how price evolves and oscillates up and down over time using these levels of past price. And what we're going to see is how respectful price is of these levels. And what that helps us do is, because our job is to monetize the chart, right? Well, we want to be able to know where's the kill zone, right? Where's the opportunity to create trading ops, right? Well, we look at these levels. It's not pin the tail on the donkey, but it's to create ranges, right? To create ranges so that we can trade within those ranges, in and out of them. It's just another tool that we have to track and trap price, right? Once we track it and trap it, well, then it's just ours. We can monetize it up and down using the methodology that we use. Here we get a real clear sell signal off the 4-hour chart right at a level that we identified ages before, right? So when we see that level and we can see how price has struggled with it, we get a candle like that followed by a big red dagger down that obviously triggers a sell signal. You get the divergence in the T line and the 5 EMA, and you have a nice run. So we talk about creating alerts on our charts. Why? So that we don't miss stuff. And just because you think, oh, look at that candle, I missed the move. Really? Did you? No, you didn't. Use alerts. Whether it's price falling below certain levels or short-term averages breaking longer-term averages up or down, however you want to get your bell rung, do that. I do it because I can't be it. You can't have eyes in the back of your head. You have to create some sort of structure behind your trading, and using these simple alerts, and TradingView is great for that. And you can have them repeat if you like. So if you're watching a handful of tickers like we talk about, so you're not overwhelmed, and you're using alerts, do you think you're really going to miss opportunities? Probably not. They're not there to alert you to take every trade. It's there to alert you to analyze that setup at the time. And if you want to take it, if it looks good, you can. But that's just a simple way to say, hey, you get an alert here, because I know how I would set my parameters. I'd get at a signal, I would see that, or an alert rather, and I would see that it's coming at that past level. Yeah, I'm interested. I need to know that. And then our methodology takes over. You're trading on the south side of the T line in the 5 EMA, yes. Price continues to fall. Do you challenge? Yeah. What is this? Just 3 green candles in a downtrend. Here's 4 green candles in a downtrend. No big deal. We can manage all that. But here we go. Let's go keep moving along. Right? We're just here to do what we're told. Chart tells us to buy, so we buy. Chart tells us to sell, so we sell. That was ugly. But those points and flats and these doji candles, excuse me, they tell us a lot. And here they're telling us that there's a lot of momentum down to create that point in that short-term average, actually both in the 5 EMA and the T line. We kind of jokingly talk about following the yellow brick road. Well, that yellow brick road on my chart is the T line, which is the 8 EMA. Anybody can use the 8 EMA. You don't need a special recipe. You just add it on, right? Here's a great example of consolidation, right? We try not to trade the chop. We're looking for the breakouts and the breakdowns. And if you were trading this, are they tradable? Sure. But they're not going to be a lot of fun. These are the ones that we want to latch into, right? Because they're all not like this. You got to go through some of this before you get to the runner. But it certainly did that, right? And you see price trading on the north side of the T line and the 5 EMA, and that area between those two stays diverged. Well, you know the trend is intact. Okay, there's another challenge. So this time we break. We created this level, and as you know, we've created these levels along the way. Now we're just kind of replaying back. I think this is where it's going to get really interesting. See how relevant this level is? And we're just demonstrating that current price does revisit past price. Well, doesn't always happen in one candle, but eventually it gets there. See again. Right? And I like to put these levels on here simply because when I see moves like this, and I see that it's at a level that I know I drew weeks before, maybe even longer before, because of how I trade based off of fibs and fractals and filters, this is, I need to know, I like to know where these levels exist, just as a simple visual on my chart. Great example of the T line and the 5 EMA splitting apart like that. You start trading on the north side and you're in an uptrend. And there's absolutely nothing to be thinking about in this wave at all. You got a buy signal, and for the better part of a day, you thought the trade was going nowhere, and then it opens up. And this is just trust the chart. Were there several signals in here? Yes. And people ask me about this all the time. You know, how do you handle this? Well, if this is a buy, just blow this chart up a little bit. If this is a buy candle, and I'm looking at this past price to the left, and I know I have to put a stop in, with the understanding that if price breaks below a certain level, I'm going to exit the trade automatically. The question becomes, what is that level? Well, if we look at, in this case, where this past price has been to the left, I'm just going to try and average out some tops and some bottoms to create a stop level. And, if you were to hit it, fine, you hit it. If it's to the, don't think of it as a fail. It's not a fail. You might have to get stopped out and make a very little bit of return for a while, or average return, before you get a runner like this. But that's okay. You absolutely do not mind, right, once you catch it. But it's a great example of flat trading that eventually opens up. And when it does, price is going to choose a path, up, down, or sideways. And here we go. The sideways part you already looked after, so you knew it was going to be up or down. Again, look how price respects. Look at that. Wick, wick, wick. Okay, so now we're getting into, you'll see that thin blue line to the right. That's the upper value range, I believe, of the volume profile. And the volume profile, I believe, is set to 200 candles. So what you're seeing now is how the volume profile is kind of aligning as another level. Here's the one we drew ages before. There's the upper value range. And now you can see you've got a range. You're following your signals, but it helps you box in price. Here we have a big move down. You get the sell-off, and where does price come back to? Well, a level that we dropped on before, because we've been adding these levels over time. Doji candle, 5 EMA turns red, right? So what's that telling us? That's money leaving. Doji candle, money leaving, sell signal, probably a short, or at least a get out. Look at the divergence here on the 4-hour between the T line and the 5 EMA. The heavier and thicker the divergence is, the more momentum down. But you're probably saying, oh no, how do I handle this, right? How do I manage the trade? Well, the chart's going to tell us. Is there divergence? And is it open? Yeah. You stay short. Gotta love this. Wick the T line and fade and close below the 5 EMA. Here's another candle, wicks through the T line, fades, and this is an impulse down. Did you get a snapback higher? No. You get weak candles that fail. And it's helpful to know where they fail to. This is what trading is all about. We're not front running anything, but we understand the history of how prices unfolded in front of us, and we understand that current price revisits past, and so on, all these things we talk about. So when we see this, you have a big wave down, two candles literally wick that level, you have equal bottoms on them, and boom, price moves higher. There you go, you catch the lower value range. That's what that is. That's the volume profile, lower value range. It's not an accident. Now, did we know well before, when we were moving this chart across, that this level just was going to be the point of control? We had no idea. but it is. So when you break out of a level, do you get more excited about that because you know what it's meant as support and resistance over time? Yeah, you do. Okay. Anyone? What do you see here? That's about as close, minus that little tiny wick there. That's about as close to a gravestone doji as you're going to see. You don't often see things textbook on your charts, but that's about that's about as close as we're going to get. So those are typically exit candles. I would see that candle and I would see the 5 EMA, that short-term average, turn red like that, and I'd be going, I don't know, that kind of spooks me a little bit. Oh, okay. Here we are again. We drew this, we talked about this. If we go back, and this is why we do these, and these streams are all here on YouTube at Blunhouse TA, and we've talked about this every stream, right? That current price revisits past. These levels that we're drawing for a reason, and that eventually it would become evident to us why we were doing it. I think it's very clear, right? We had no idea. But it goes to show you what you can learn in advance about price. And when you get to stages like this, right, we already understand about consolidation, and it's, you know, you have three options: up, down, sideways. Sideways was taken care of here, so up and down was our options, right? We know that breaking this level that's acted as support and resistance in the past is going to be important. Well, here's proof. Do we need to show any more? Right? This is why we do this. Now, I don't want you doing it at, every 3 or 4 candles, because your chart will become impossible to look at. But the time frames that you're comfortable working off of, yeah, it makes perfect sense. Like, when we do these, we're typically doing them in here off the daily. Or quite often, I think we started drawing them off the 4-hour originally. But, we reference the daily so often, and you can see the relevance on the daily of what we've drawn in it, way back here, starting to draw. Like, it's crazy. Right? But it's incredibly helpful to understand, because not everybody, I hate to say it, is looking at the daily chart, right? They're looking at the short time frames and they miss the nuances. So just step back, keep it simple, look at the daily, make sure you know the direction of the trend. You don't want to push water uphill. This has been a bearish chart for a while. 2-week impulse up, 2 equal tops, the point telling you there's a change in direction, the sucking sound of money leaving triggers the 5 EMA to turn red, and the trend is down. Now let's deal with this candle here on the daily. So, because you're responsible traders, you had stops in place. Right. Actually, let me use another chart, because this was a Twitter post, I think. So, because you're mitigating risk and you treat this seriously, you would have had stops in place. If you're short, you would have had a stop in, and in all likelihood, this daily candle at some point would have triggered a stop, be it a trailer, a hard stop, whatever you're using. In all likelihood, it would have triggered you to exit. Right? Now, this candle here turns out to be just a flush candle. Right? We don't know what the candle to follow brings, right? But when you see a big candle up like this at the end of, which we'll call this a downtrend for lack of a better explanation, big candle like this, but the divergence that you see between the T line and the 5 EMA is still there and intact, and then this candle that follows, these two equal tops, the divergence is still intact and arcing downward. What do we know that this is shaping up to be? This is shaping up to be a failed breakout. Now, if we throw on some MAs, it would be interesting to see if there's anything in here that we were hitting our heads on, but that's looking like a failed breakout. And what do we know about that? Well, we know that you'll take out the previous wave's low, and that's what we did. But this was just a flush candle. That's all it was. There was no snapback. Like, there's nothing. Pushed up, didn't have enough momentum to pull the 5 EMA up through the T line. Couldn't do it. That's the candle you fade when you see that divergence there. And where's your stop going to be? Oh, I don't know. Like, how about at the two equal tops? Because if you're going to break out, you're going to break out. You don't want to be any part of that. If you're short, you don't want to be any part of that move to the upside. But the market's telling you that's a perfect place to put it. Simple. But the divergence between the T line and the 5 EMA is really key. Really key. And what else are we looking at? The 20, the 50, and the 200, right? Just to keep it simple. Look where you wicked on this big red candle. You wicked the 20. Right here, like to the penny. Couldn't break the T line and the 5 EMA up to the upside. Nothing. These little dojis in here, these are weak candles. So this is impulse down, sideways back to the T line and the 5 EMA. Where's our short opportunity? On the candle that embeds itself inside, right? So that's the following candle. Divergence was still there, right? In the T line and the 5 EMA, yes. So that's this is weakness, right? When you have impulse down and then go sideways like that, that's weak. It's weak, weak, weak. And look, there's your divergence. That's your actual entry candle if we're following our script. And boom, price sinks. Here's another example, right? The equal tops, boom, price fades. Look where you're hitting your head. Don't long into resistance, right? Why? Well, here you go. So we're just layering simple technicals on our charts, right? We started out with nothing, just the levels that we drew in the past. Right? But it's very easy to see now that this was just heavy resistance as well, telling us, hey, that was probably a good opportunity to fade. And you do, you come back, you take out the previous wave's low, and what are you looking for? What does price look for in the event of a downtrend? It's looking for other bits of past price, benches that it can sit on. So this is what falling into the volume gap looks like. We talk about this all the time. What happens when price gets into these areas? It can fade quick. That's kind of what's happening. And we already know that this gray stuff up here is just light trading. This is where all the dense trading happens. This is the point of control. That's where the majority of the volume is on an averaged out basis. So this is just weak anyways. Right? But here you go. I'm just going to switch this chart. so that the horizontal lines aren't there. You're failing the 20 and you're failing the 50. We talk about it all the time. You're trading above the 20, the 50, and the 200. Yes, at some point, you're going to come back and tag. And every time you come back and test it, there's an element of risk that price may fall. That's what happens. When you see, and hopefully you can see this, I'm going to blow it up a little bit. So if you're running a 20 and a 50 and a 200, just as an example, and you get a sell signal like this at a tight area where those averages have converged, that always gets my attention, because I think what the market is telling us is that it's going to fade, and it's going to fade in a pretty significant way, because nobody wants to take price above the 20 and 50 here. So, you know, you've had lots of opportunities. Is this the first attempt after breaking? Yes. What happens to first attempts? They typically fail. Breaking the 20 and the 50, testing the 20 and 50 and failing. So I always kind of pay attention when there's major moving averages and then you start getting a sell signal. And again, remember that we interpret this as bearish because it didn't challenge to the upside. It didn't snap back, right? It just laid flat. So it's kind of a culmination of these checks and balances. And then we use fractal analysis, which is just a shorter time frame, right? To get an idea of, you know, where we would have caught this. And you have two opportunities, right? Obviously the very, very top, which everybody will be looking at. But what happens when you're trading above the 20 and the 50 and the 200? You're vulnerable to coming back and testing. And when you do, you risk failures. And that's what happened here. You got love from the 200 MA. Challenge the 50. So you break, sideways, challenge, first attempt, more inclined to fail, and it does. Failing the 50. Yuck, don't like that, right? Or failing to challenge and break through. You already failed. So, failed to break through the 50, boom, you cracked the 20 right away. That's the point of control on the volume profile. And that divergence kicks in and you're obviously in a short trade. Here's a great example of kind of testing our wills, right? You've had a nice move down. You're not being freaked out by these green candles that you're seeing are just green candles in a downtrend. Relax. Relax. My God, everyone gets so excited. They freak out when they see something that goes in the other direction. Inhale, exhale. You got to breathe, man, through this. Here's your first, kind of attempt at the 20, and it fails. But you never got the 5 EMA breaking through to suggest that, hey, there was enough momentum here to break trend, right? So, because what we're trying to do is validate what we're seeing on the daily, on the shorter time frames, or picking up early what we think we might see on the daily from a shorter time frame. Right? But that divergence was still intact. This could be a 5-minute chart, a 15-minute chart, a weekly chart. I would still interpret it the same way. What's the thin blue line? The lower value range on the volume profile. You close, look at that, eh? Like tops and bottoms, tops and bottoms. Here's your next move down. This is ultimately a failure of, that's the 200, that's the 50. Fail one level, find the next. Can't hold it. Failing major moving averages. Sell signal at a major moving average. So what's my range? The 20 and the 50, right? I can't seem to break the 50. You get a sell signal at this candle. And what's triggering that? Well, there's some stochastic RSI parameters working in the background. A couple other things. And the T-line and the 5 EMA. So the T-line and the 5 EMA, you can see them here just kind of running on top of one another. But the shorter term 5 starts to fade, crosses down through the T-line. The other things working in the background are able to confirm that this is a safe signal. And then price goes down. So basically, you're catching an early entry on a larger move downward. And that's your edge. And knowing how to interpret the intraday price in a larger trade. So if you were short up here and you're thinking to yourself, and you're probably leveraged a little bit, right? So you're short up here, you've made very good money, and you see this action and you're like, oh, I'm going to cut it. And you can, right? Or you can let it run and realize that this divergence was so heavy that it was going to take a lot to move this trend. Chances are you're going to fade and continue to fade, because as long as this divergence is down, I stay short. I trust the chart. Even if it means having to watch this green candle, I'm prepared to do that because I trust my chart. It's the probability of the downtrend continuing outweighs the times that it changes trend. Right? And all we're trying to do in this is make sure that the odds are stacked on our side. That's all we're trying to do. And it doesn't matter what we're doing and what we're looking at to do it. And let's look at XRP. Excuse me. Daily chart of XRP. This is the little trend line we drew before, when we could start to connect some tops to here. You can see how price respected that level. And now on a daily, what have we done? We've started to fall into this gap, but you're getting good support at this level. Now, this is something that we weren't charting like we were charting Bitcoin, but I am pretty sure these bottoms we would have identified, even if it was a shorter time frame, as something relevant. And it obviously is. And if you fail it, and you get into the real meat of this volume gap, then where do you think price might come back to? An area that it's discovered before. And so if we back this up even farther, because there's probably people trading this. So on the 1 hour time frame, just going to blow this up a little bit. Hopefully you can see this. What are our choices? We got 3, right? Up, down, and sideways. So if we're looking at this here, this is the sideways. And we've kind of, so we're taking care of the sideways right now, right? As you're in this trade. Here's the trend line that we drew on the daily. And we get to see it on the 1 hour. Because we use fractals, right? Fibs, fractals, and filters. So because we believe in fractals, just because we drew that on the daily doesn't mean it's not going to be useful on another time frame. Well, sure it is. And here's an example of how it works off the 1 hour. So you would have seen this big impulse up in this green candle here. And you would see that, just take this off for a second. So you had this big green candle up, and then all of a sudden, when you hit this area, something didn't like it, and that candle starts to fade. So the fact that it's fading a trend area is relevant, but the fact that you see the short-term time frame and the 5 go red like that, that's That's an indication that there's money leaving with some velocity. And then you fade. Now, a lot of people would have picked this up on this time frame, and you would have, like, again, you've got basically those two equal tops, right? So flush, drop sheet, and down it goes. And you're breaking, look, you're twisting all these major moving averages, right? All of this in here has twist, 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 and when it unloads hard. There it goes. Break the excuse me, break the 20, the 50, and the 200 right here. Another example of, you know, push up, two equal tops, and then this candle starts to fade. There's your divergence between the T line and the 5. But breaking all of this stuff as it's twisting is a big deal. This is an ideal chart to trade. And when did you get in this trade? This is the important part. Here's the big move that everyone's going to talk about, but here's where you got in, somewhere over here. And if you would have been stopped out, you would have seen these two equal tops, right? Impulse up, it's getting scared, doesn't want to cross the 50, and all of it really. Two equal tops, boom, fades. You would have been in up here. Long before everybody else. And again, that's your edge, right? We trade what's in front of us. This downward trend does not mean it's going to happen forever. It'll last forever. At some point in time, it's going to change. And it does. And here we are, testing the 50. And because we respect that these levels of past price and time, we understand that that's what's happening here is relevant. What happened here when you challenged the 20 for the first time? You failed. A little bit of chatter, right? Testing the 20 and failing, and chattering before you get to take off, but the trend was intact, right? Look how the 20 MA respects, or price respects it rather, scoops up. Now it's moving higher, but there's your confirmed entry. But you would have seen, as soon as I would have seen this white, I probably would have gone in long. And yeah, you're cheating a little bit, and there's some risk there because you don't have a confirmation yet. And that confirmation basically is there's enough momentum to keep pushing price higher, as opposed to this just being a few candles higher in a continued downtrend, right? This case, you got lucky. Even on the pullback, these just turn out to be, you know, a handful of red candles on this 1 hour time frame. But the trend was intact and price moves up. And here's the first test of the 50. The first tests have a higher probability of failing. And that's what we're going to wait and see, right? So if you're long, and you, whether it was here or down here, if you're long, you're still long, right? Unless you just want to, you know, take your toys and go home or take some profit off. But my point is that the trend is still intact. You understand that you have to deal with the 50. You understand that you have to deal with the 200. But you also understand that if you can break that, this level here, 296, if you can break that on the 1 hour and get into this gap to the upside, price is probably going to want to reach what? The point of control, where buyers and sellers have shaken hands in the past. It's a comfortable place for price to go. It's like the most popular bar in your downtown on a Friday and Saturday night. That's where price is going to want to go. That's where the party is. That's where it's been before. And that's where it'll be again. You understand that if this fails, because it is the first attempt, whether it be the 50 that it's going to test or the 200, depending on the momentum it's behind it, if it was to fail, where is it going to fail to? The next level down, the 20. Right here, where the lower value range is. And if it did do that and it came back to test it, that would be the first test on the way down, and it's more inclined to bounce. So if it did do, like, this is all hypothetical what we're talking about. So if this candle was to fail, come back and test the 20 and get that first bounce, would it be the first time it tested the 50 or the 200? No. So it's more inclined to break through. And it's just a series of these things, like tests and fails and tests and fails and tests and fails. But that test and fail process can be to the upside. Like, it's all a process. And understanding how price moves, the ebbs and flows of it, will help you stay less stressful, right? You'll get good signals early, and you'll put your feet up on the desk and just relax. Let's look at, this is ETH. Daily chart. What always amazes me is how can people be surprised on what price is doing when they have the option of looking at a chart. Like, it's telling us what it's doing, right? This has been a bullish chart for quite some time. This is the weekly. Big downtrend, big wave down. This is what's great about the script, is that if you're visual, it really does help make sense of everything quickly, right? So even for the most inexperienced trader, you're just starting out, if all you were doing was taking this signal short on this weekly chart or taking this signal long, you would be fine. Now, if you're more advanced and you've been doing it a little bit longer, you've got some experience behind you, and you've had your face rubbed in the dirt enough times to learn, maybe you would enter here long off the 200, right? Seeing this consolidation. But when you see the buy signal, like tag, 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 so you're really waiting to see if price is going to drop, pop, or drop. Well, there you get your signal that it's going to pop, and you want to be part of that. And here you go. But to the downside, that could be a sell signal, as all you would have to do is take it until, it became evident that the trade was done. But this has just become a monster. Weekly, you got 4 weeks here of basically holding 1577. Give or take a few cents. Red to white, what's the white mean? White means there's money coming in. And why do we look at these charts on multiple time frames? Is because, hey, this, the week of the 21st, Monday the 21st, so this is a weekly candle, so there's some good looks in here. Where's the 21st? Here it is. Here, yeah. That's this kind of representing this big move higher. It's ebb and flow, right? Price goes up, retrace, price goes up, retrace, and so on and so on and so on. But you had lots of warning, lots of opportunity to see. 1 hour chart. This is what we're looking for. There's the 50. This is the first attempt. We'll see what happens. If it fades, we hope to get some support in here. Have it bounce, take another run, and then maybe it pops through. And this is just trading. It's not a reflection of what we see as good or bad in the asset, or whether we like it or endorsing it or what. It's nothing to do with that, right? It's just a chart. The only job we have is to monetize the chart, and that's what we're doing. Where do you think the resistance has been on Solana? We've talked about it before. This upper value range on Solana is really key, right? Really key. Every time it seems to tag it, it fades. But it's just a matter of, as my trainer told me, it's like to hold flowers and chocolate. You want to go out? No. Okay. You go home, you go get some flowers and chocolate, you try again. You want to go out? No. Okay. You go home, you get some more flowers and chocolate, you want to try and you want to go out? No. And repeat and repeat and repeat. Test, fail, test, fail, test, fail. And when it fails, you also know the levels that you should be looking for support just in your MAs. You throw that volume profile up, and that's pretty powerful because you know that trading in and out of these areas on any time frame can be really, really meaningful. You notice a lot of these charts are looking quite similar. Are you trading above the 20? I love stuff like this. The 20, the 50, and the 200, yeah. Was this a very this is basically parabolic on this time frame, right? That's a lot of fairy dust and air in there, and that fairy dust and air of that parabolic price movement creates opportunity on the way down. And when price falls, it falls hard, and often it's because it's falling into a gap like this. There's a volume gap, there's nothing substantive back here to hold price up on the way down, and that's why the move retraces the way that it does. So if we throw fibs on it, fibs, fractals, filters, let's take this low to this high. What do we want to use the fibs for? It's just another opportunity to put a tool in our toolbox that helps us understand where price may want to go. It helps you set targets, like we were talking before we came online here with a couple people in the group. And credit to this person was talking about how they've recognized on their own that they need to be setting targets, reasonable targets. So for example, on this 1 hour Solana chart, a reasonable exit on a short is going to be 618, right? So there's your swing low, there's your swing high. 618 is a reasonable retracement according to Fibonacci. And it's something that I use all the time. So what I'm saying is that if we've identified this as our swing high, and we're looking at this chart now from, let's say it's going to be a short, what would be a place to take profit on the way down or exit the trade entirely, whatever your methodology is? I would look to 618. It would be a place that I would look instinctively, as well as 0.5. And 0.5 actually got quite a bit of basing out, some sideways trading. But this sideways trading is only doing what? So you have impulse down, sideways that just basically challenges the T-line in some cases, and then fails. Right? Fail, 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 fail. These ones fail the 5 EMA. But when I see this setup of that impulse down and then the sideways movement that doesn't change any of this divergence down, I feel very confident that 618 will probably be the level that I will get to, because in addition to that, I have the 200 MA here, which is a target. Break one level, find the next. Break one level, find the next. Here it is. So we found it. So this sideways stuff along 0.5, you could be bored from, but that divergence is still open, telling us that there's still momentum down. That momentum down, what would have to happen to literally spike the 5 EMA up through the T line in the next candle. What would that candle have to look like to do that? The damn thing would probably have to break the 20 in order to have enough juice to actually reverse this trend. That's not going to happen, or the probability of it happening is pretty slim. Seen this setup before? Right? You finally get your buy signal. And here we are, waiting to challenge the 50 and a whole bunch of past price on this time frame. But this will give you, using the fibs, once you've identified the swing high, the fibs will give you areas to look at to take profits and create targets. I'm a 618 kind of guy. That seems to be my thing. But I see the 200 here and 618. That's automatically my target. And that's, you know, where I would have taken profits or closed the trade. And let's say I close the trade here, and then I see this candle. I'm not going to be upset about it. Oh, damn, I missed a nickel or two. Oh, well. You move on. Then, lo and behold, it had other intentions anyways. Don't worry about the pennies. Set your targets, take your money. But set the target. If you don't set the target, then you're vulnerable to the retrace, and then you spend your life chasing your tail. And that's when it feels like you're being chased around the chart. Right? And that's an uncomfortable feeling. Like that you never really have a handle on what's going on. And that's just not a lot of fun. Right? So here we wait on the Solana 1 hour. Now another thing that we've been following, and you guys can zip in some questions anytime you want. Another thing we've been following is Xano. And it's a privacy blockchain. And the thing has been on fire of late. This is the daily. Now, we have to trust our charts. And one of the things that I've learned is I can't chase. I can, but I try not to, because it just ends in disaster. Right? So if this was something that you really wanted to accumulate, understanding where price is on a chart at a macro level is really important. Because I know that I really, 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 really don't want to buy up here. I just don't. But if I'm not looking at the chart, and as all I'm doing is reading X posts and, you know, listening to groups speak about something, I'm going to make a mistake. Because that's the stuff, that's the noise that makes you make mistakes. It's the noise that convinces you to buy at the top. Because don't you know, price will never be this low again. It just won't. It's going to the moon. It's going straight up from here. So if you don't get on this train now, you're just going to miss it. Buy, 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 buy at all times, no matter what. And that's nonsense. Buy at appropriate times that are effective and efficient for you, either as an investor or a trader. Right? I'm sorry, I don't want to buy up here. I just don't. Why? Well, first off, because price is trading too far away from the T line in the 5 EMA. The horse doesn't like to be too far away from the barn. And it's obviously trading above the 20 and the 50. And there's obviously not enough time here to bring the 200 up. So when I see price trading, here's a better example. You'll never see price this low again. If you don't get on this train, you're going to miss it. Really? You think so? No. Break one. Look at it. This is the weekly, right? We've seen this on 15-minute charts today, hourly charts today. Impulse down. Here's your flush candle. Not enough momentum to break trend. The following candle creates an equal top. That's your re-entry opportunity if you, or entry opportunity if you weren't in. Break one level, find the next. You'll always get your opportunity. Right? Just like up here, when price was trading too far away from all those levels, it's doing it again, and eventually it'll come back down. And when it does, that's when you're ready for it. And maybe you put a few more nickels together in the meantime, which makes your buy that much more effective and efficient. So don't feel like, the whole FOMO thing, fear of missing out is a powerful, powerful, powerful poison. What's the fear of being rational? What's the fear of being patient? And how the fear of missing out seems to gain more weight, I don't know. What's wrong with the fear of being smart, the fear of being patient, the fear of learning how to read price on a chart? What the hell? Block out the noise. This is the noise. Like, I know you guys reach out to me all the time when we talk about this. This is all noise. Blah, 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 blah. Do you think that with the integration of X, Y, and Z that Bitcoin will do A, B, C? I don't know. Nor do I give a shit. I don't care. We just read price on the chart. That's it. Right? We just bring out our crayons and we start drawing lines. It just so happens that those lines are meaningful, that they're helping us interpret what the market's telling us to do. So this thing has some pop to it. It has a lot of volatility in it. It moves up and down, so it's a nightmare to try and get it to wrestle. So just let it do its thing. Because at the end of the day, what do we know is fact? We know that it's trading in an area where there's not a lot of history. So this is light, which means it's vulnerable to big pullbacks. This is the upper value area. This is the 20 MA. At some point in time, it's going to want to visit these areas again. And if it doesn't hold the 20 and fails, well, then you look to the next level down. If it does hold the 20 and bounce, then it just turns out to be a continuation and price moves on. And you will determine as, the retrace happens when your opportunity is best. But you'll be able to see it because you understand how to read this stuff. And you'll know when to make your buy. But you don't want it to be up here, because if you really believe that price will never be lower than 14.25 again, you need to give your head a shake. You just do. Be patient. Don't be the one running around the room looking for the fire alarm all the time. My God, that guy's annoying. Just be patient. Relax. Don't get sucked into other people's tornadoes. And that's the group speak. Especially about assets when it comes to things like Bitcoin, where it becomes almost religious. Right? It's just price on a chart. That's all it is. It's just price on a chart. And the momentum or lack thereof of price on a chart will determine what these ranges are. Right? This is the daily US oil chart that we've been showing for a while, just like the Bitcoin chart, just like everything else, so that you can see firsthand how price moves. And so that we don't look batshit crazy when we say that potentially price could hit this level. Because we understand how to dissect the chart. We understand that it's a language. We understand that if we learn the language, that's all we got to do is listen. Way up here, 94, 95, or whatever it was, you tell people oil's going to be $70, they think you're batshit crazy. Because it's $5 away from 100. It could wick it tomorrow. That's nonsense. Nah, not really. Right? That was the top. Right? If you don't know how to read price on a chart, and as all you do is spend your time online talking about what you think and listening to what other people think and not developing your own thesis because you've lost the ability to think for yourself, then that's a problem. This candle was telling you at the top of this weekly chart that it was time to get the hell out. The reasons why, fundamentally, I don't give a rat's ass. I don't care. I don't care if somebody fell in an oil well or if I don't care. It doesn't matter. Is all I know is that that's the top of this run on a weekly chart. So, are you going to go long here? No, because you're not stupid. You're going to short it. Pretty simple. But you don't know how it's going to unfold after each and every candle is done. Is all you can do is have an understanding of what would happen if. What's the evolution of a breakdown? Where would price go if the evolution of a breakdown continued? Well, in the very simplest form, how about $61.66? That's insane. Is it? Why do we draw these lines? Here's a trend line. Why do we draw it? When did we draw it? As soon as we had an opportunity to connect these tops. It just so happened that it's been well respected. Oh, by the way, here's our 61.66 level. Back in here, connecting this bench of past price and up through here and up through here. Remember we talked about drawing levels? I often draw levels or targets using the T-line and the 5 EMA where they align. Well, here's an example, right? Catching this bench of past price. This is not rocket science. A child could do this. It's easy to pick up. We talk about these types of candles all the time, right? These big impulse candles up or down that create equal tops and equal bottoms. That was just one of parts of the rationale that put my number at 61.66 that, you know, apparently I was supposed to go get my head checked by people that actually trade this shit for a living because they knew better. I guess these are the same guys that couldn't read their charts in 2008 maybe. I don't know. I'm sure there's a place for them, a special island somewhere. But nevertheless, the chart was telling them what was going on. I don't care what I think. Only thing I care about is the chart. Why should I care about what somebody else thinks? What I think oil should be doing doesn't matter. The only thing that matters is what the chart's telling me it's going to do, no matter what I think. So why do I care what somebody else thinks? And a lot of these people are pretty smart and know their industry really well. The only thing they can't do is read price on a chart, and that's where they fall down. Because the chart discounts everything. Everything. Whether you made money, lost money, whether money you have lost investors, gained investors, more sales, less sales, gross margin per square foot went up or down. Doesn't matter. The chart's going to discount everything. The smart money knows. And the smart money is what's on your chart. When you start breaking simple things or long-term levels in price, there's two averages on this chart, a 1,000-day and a 500-day. 1,000-day moving average on a weekly chart is how long? It's about 42 some odd years. So when you're finding support from 42 years and, oh, here's 20 years, because that's the 500, and on that time frame, that's what it represents, 20. So when you're finding support from 40 years and 20 years of price history, you can feel good about that. But how do you feel when you break it? Good or bad? Or are you even looking? Right? Like literally, this is the example of using the 1,000-day MA where, you know, my mentor pulled me aside and says, hey, I'm going to show you something, and one day you're going to be the only guy in the room not making a mistake. And this is what he was talking about. If you don't understand that this is a commodity, by the way, so that trades in cycles. So if you don't know that you're finding support and or failing 40 years of price history, then you got a problem, because you're going to get hit by something that you didn't see coming. And that's why we do this. We look forward, we look sideways, we look backwards, so that we don't get hit by stuff we didn't see coming. And we understand the relevance of time and price when it's put together. And when you fail 1,000 days of price history, the market and the world is telling you something. And not only did you fail 1,000 days, you also failed that 500 day as well. And where did it bring us? This blue line is 61.66. Once, twice, 3 times, 4 times, 5, 6, 7, 8, 9, 10. 10 weeks it's hit it, and it's going to hit it again. And what do you think it's going to mean? Because this level is obviously relevant support and resistance if you fail it. And then you got to work at getting it up again. That's hard work, right? When you fail all this stuff on the downside, it's hard to break it to the upside. You need a ton of momentum and a ton of money. This is the most valuable trade in the world each and every day. The chart's telling us not to get excited. We talked about this in last week's stream. Here's the impulse down on oil off the weekly. We were going sideways. This is what we were looking at the time. We were going to go sideways. We had already broken that level. Where do we short when we come back to the T line and the 5 EMA? This is not overly complicated. It's just discipline, right? The discipline to go through the repetitive process of identifying what price is doing time and time and time again. You're trading below, failed the 50 on the weekly, right? If Bitcoin failed the 50 on the weekly, would you be concerned about it? Probably. Right? So you should be equally as concerned if oil was to fail on the weekly. And that's what it does. Break one level, find the next, break one level, find the next, break that level. Well, failed breakout, right? You're going to arc, you're going to come down and take out the previous wave's low. And that's how you get back to 61.66 again. And what's the range? So people have said to me, well, I still think $100 is the high range for oil. I'm sorry, it's not. It's just not. The high range for oil is $75. This level in here. You have to trade above $75 and above all your major moving averages here for a meaningful amount of time before you can even begin to start thinking that this is over. This is a monthly chart, and it still looks like it's breaking down. Here's your failed breakout on the monthly. What do you fail? The 200. So failing the 200 on the daily sucks, and failing the 200 on the weekly is terrible. What's failing the 200 on the monthly? I don't even have a word for that.
I do.
Oh, here he is. Butters. How you doing?
Good, man.
Good.
It's amazing that what you're saying, it's kind of like turning the Titanic. You can do it on the 5 minute, but you can't do it on the daily, the weekly, the 4 hour. It's hard to do.
Yes, it is.
Otherwise, they would have done it around the iceberg. You know what I mean?
Yeah, and what makes it even more difficult is that you're not driving, right? Like you're just hanging on, shifting your body weight from side to side, trying to influence things, but really you're not driving. So, here we are. We're still... Is this still diverged? The T line and the 5 EMA? Yeah. It just so happens to be a monthly. Are we still kind of unable to break trend to the upside? Yeah. Again, just another layer that we use for our analysis. Right? The 200 has been very difficult for it, it seems. And it's a very, very realistic level, and now it's combining itself with the 20, which in a sense isn't a bad thing, right? Because when your moving averages start to twist together, even over long time frames like this, that means that eventually you're gonna get your pop or drop moment. The sideways stuff will have taken care of itself, so that's one of the three options off the table. Now it's just pop or drop. But this is a heavy day for WTI. But again, as all these are just turning out to be green candles in a downtrend. Simple stuff. Failed breakout at resistance. Told to take your toys and go home real quick here. You break the break the 200. You sit on the 50. Sit on the 20. The next candle sits on the 50. The next candle fails the 50, and then it's flowers and chocolate time. Here's your first attempt at the 20. First attempts typically fail. Boom. Don't worry about the fact that you got a buy signal and then you got your next candle is bearish engulfing. Don't worry about it. It's just the market doing what the market does. If you were in this long, you, because you're responsible as a trader, would have had a stop in here that would have mitigated the risk. You'd also be looking at shorter time frames so that you could see maybe in advance what might be coming. You got a little bit of a heads up here. This is the 12-hour, which maybe in a sense is in crypto. Well, this isn't crypto. This is oil. I forgot it was Bitcoin for a sec. But here you go. There's your failure of the 50. Where you come back to? Back to the 20. It works, right? It's easy for everyone to pick up, right? It really, really, really isn't hard. If we look at, I know our friend Rico, he may or may not be in here, but I know that he likes to trade this crypto called CFX, Conflux Network. No idea what it is. But here's your daily chart. And it's pretty clean. Up, down, and sideways, there's our three choices. You spend a lot of time going sideways, like a lot of these things do. So you kind of anticipate that. Everybody wakes up every day for the big move higher. But when you wake up in the morning, do you actually expect to wake up, have your coffee, brush your teeth, have a shower, and then just reach in and catch a big green candle that's going to change your life? No, it doesn't work that way. Like maybe you see that on TikTok, but that's not reality. Right? Every once in a blue moon, there's people that have that kind of luck. But that's not why we're here. We're here because we're professionals. We treat this seriously. And we understand that we have one job, and that's to monetize the chart. To make our lives better and those around us, their lives better too. So if you woke up every day hoping to grab a big green candle and it was going to change your life, you're going to get pretty discouraged after a while. So the headspace needs to be, I am a trader or an investor, and these are my objectives. This is how, if this is what I'm trading and I want to trade this, it's going to be one of my handful of symbols. Bitcoin, ETH, maybe this, a couple other things, whatever. But you're going to be all over these charts. And you're going to be looking at them on shorter time frames. And you will pick up big moves up or down. Now, I want to back up here a little bit. This is a 4-hour chart. And I often suggest to a lot of you that you get off the shorter time frames and get on the longer ones to kind of make your life a little less chaotic. Get accustomed to running the script and, taking signals and then setting the appropriate stops at the right levels and, allowing the market to do the rest, right? And just sitting back through the ebbs and flows. So here is, this is the 28th of July. So this is kind of your big green candle day. Yay, exciting. Some people would have grabbed it here, some up here, God forbid up here. But where do you want it, right? Because you understand that by blocking out the noise and focusing on the only thing that matters, which is price on a chart, when were you in the trade? And again, this is one of the 4 or 5 symbols that you're going to track, because that's, you don't spread yourself too thin. That was your entry, way back here, right at the 20 on the 27th at 4 a.m. in the morning. So hey, you would have got an alert maybe, right? We could have set an alert for this type of thing. And then you would determine whether or not you want to take that trade. And let's say you hit the buy button in the middle of the night, essentially. You don't think anything of it. Go to work. You realize that you made a trade in the middle of the night at lunch, and you go, oh my God, I better check my trade. And that's what you see. Are you upset? No. The market will tell you what it wants to do. It's not but it might not be the outcome that you want. So essentially, you have to have the proper expectations, right? You're going to take these signals more often than not on this 4-hour time frame, and you're probably using a little bit of juice, so they'll be, reasonable trades for you. And if you mitigate the risk, you're going to make a little bit of money in here. But the expectation is not for this every day, right? The expectation is to make safe, profitable trades. And by doing what you're told at the right time, by listening to the market, and that's what we're doing, generating these signals, we're listening to what the market's telling us, you can enter the market at a safe period, right? This script is about safe, profitable entries. This is a safe, profitable entry based on the parameters that are in it. Yeah, every once in a while it spits out a conflicting signal. That's life. That's reality. Life's not perfect. Neither is what we do, but it's pretty damn good. And you would have been the one in the room as everyone's talking about this parabolic move higher to that 27 cents. You're going to be telling people that you were in it yesterday. You saw it yesterday and took the trade the day before, while everyone else is freaking out, excited that they caught it in this area. You're in back here. That's why we do this, right? This is the edge. What do you see? I don't know. Maybe 2 equal tops. Short-term average is pointing out. Our script shows you that the money is being sucked out. That shows you the red. I don't know. Maybe it's time I short. I don't need a signal to short this, and neither should you. And if you did short this candle, whether it was in the wicks, whether it was in the 2 equal tops, it doesn't matter. There's your stop level. Not too hard. And you can always move it as you get in profit. Don't pat yourself on the back and kill the trade just because you had a good 4-hour candle. The market was telling you through that divergence down that it still had more to give you. And because you know that you were trading above the 20 and the 50 and the 200, because you had spiked higher, that you had to come back and test it. Now you pat yourself on the back. Not up here. What the hell? Drives me absolutely batshit nuts when I hear people do this. If you're gonna trade this system, trade the system. Right? Check your ego at the door and just do what the market tells you. This impulse up, what, you could monitor 4 or 5 assets in crypto. That's all you would have to do to see this 12 times a day. Seriously, on different time frames on those 4 or 5 tickers. That's how frequently you'll see it. Big spikes up. Oh, doji candle. Short terms point out. Fade to fade to red. 2 equal tops. Bang. Price comes down. Where does it come down to? A reasonable level. Could have been the 5. Could have been the T line. Could have been the 20. In this case, this candle rested on the T line. The next candle opens right at the base of the other. Can't break the 5 EMA. Sinks. Same. Repeat. Look, you don't get your actual confirmation until here. Right? Why did we add this feature to it? So that it gave you an opportunity to enter earlier. This is a great example because it's such an impulse up and then the 2 equal tops and then the fade filling all this gap, right? In here, filled all this air with this candle. But this allows us to get a quicker entry if we want. And it brought you almost all the way back to the 50 on this time frame. Here we are now. Jesus, how far did I move this chart? There we go. So here we are sitting on the 50. When you would have been in this trade, so this is so funny, eh? Like on the 6th, and you get all this move, big parabolic move up. But hey, you're in way back here. That's what we like. Until the market tells you, it gave you the signal, until it tells you, as you're working up to what you hope is a real move higher, as long as it's telling you you're okay, you're okay. If you entered off the daily, take your signals off the daily. Yes, you can cheat your entry off the shorter time frame for sure. Consolidation off the 200. Like this stuff. So here's your 200 MA in red. Here's your beginning, I guess, of this wave. As long as you were basing along the 200, like this is actually would be very exciting for based on how I trade. So I get my signal and then I base along the 200 and I'm holding my trend. It would feel like it's just a matter of time before I would pop up. Holding the trend, holding the 200, and then bang. Price spikes. So you can have a lot of fun trading this stuff. Just follow the rules. Just follow the rules. Big move down. Again, look at all this air, right? Trading well above the 20, the 50, and the 200 on the 15-minute. Doesn't matter your time frame. There's your big impulse down. Price sells off. All that divergence is telling you that you're good. And here we are bouncing between the 20 and 50. Boom, boom, boom. So is this just, a series of moves higher? Are we going to make higher highs? We're making higher lows. We'll see. It's just a chart. And the chart will tell you what it's going to do. It doesn't tell us why, but we don't care because we're not interested in the why. The why has no bearing on what we're doing on this 15-minute chart. We're just reading what the chart's telling us. That's it. We looked at Monero because there's been some weird stuff going on with mining or something. I don't know. I don't really understand all of it, but here's what we knew. We had drawn this yellow horizontal line, basically trying to understand at this point back here, if price was rolling over, it's going to look for past price, right? That's what it does. And it was just that kind of bench there was just an eyeballs look. Right? So we actually came back to it, closed, like wicked it to the penny. It doesn't hold. There's your 200. So again, breaking these levels, finding the next. Sideways. What's the sideways stuff tell us? Right? So here we're sideways, kind of fighting to stay above the 200. In the other example, we were already above it with divergence up. Here we're below it with divergence down. An obvious difference. You know, wicking the T-line, wicking the T-line. Just, again, following the yellow brick road, right? The yellow brick road's going south, then so's price. Yellow brick road's going up, and so's price. Any questions, guys? Or if you want me to look at a symbol that we haven't looked at, because I'm old and I forget. So.
Hey, Blunt. Good afternoon.
Hey, buddy.
How are you today,
I'm
sir?
good.
Good. I was wondering if we could take a look at Crow real quick. I'm seeing some big news on Crow.
Sure.
I know, the news doesn't really matter, but would be a good chart to look at.
Yeah. So we don't know what the next candle brings, right? So let's back up. This is an obvious breakdown that you see to your left. And, look, you can see price challenging the 20 and not being able to break through. And then it just gets into the routine of following the T-line and the 5 EMA to the downside. This is our kind of sideways.
Blunt,
Yep.
not to interrupt, Blunt, but is anybody else seeing the chart? Because I'm still seeing BTC USD DT up.
Oh, really? Okay.
Or is it me or anybody else? Can y'all
No.
can y'all see Crow, the chart?
I got oil on my end.
Can you guys see Crow?
No.
No, it says U.S. oil.
Okay.
That's weird because I'm still seeing BTC.
How about
Let
now?
me see if we go.
You
There you
should be
go.
good now. There you go. Sorry, my bad. That's what happens when I jump around in the window. So, obvious downtrend. This is kind of the sideways stuff that we were talking about. And you can see this is 500-day moving average on the daily, the pink. And price is not willing to really break through it. Further breakdown of the 20 here. You break even 1,000 days. And bottom out here. Here's basically what I want to show you is this is what you're looking at, right? And then one day you get a buy signal with a giant ass candle like this. How do we see this in advance? Let's see if we can go to the 4-hour. You got a little bit of a head start on the 4-hour. So if this is, I try and recommend that you guys manage just like 4 or 5 tickers and get to know them really well on various time frames from a fractal point of view so that you have the opportunity to see these kind of signals. Now, in many cases, you may have been in way down here anyways and not be phased about any of the short-term intraday stuff. But, this is a weekly. Here's the base, 4 weeks basically, and then this week, particular week of the 7th of July, you go green, right? You get enough momentum. So this was actually a done deal back here, in my opinion. This is when the smart money got in. Down here. Because this goes nothing but straight up. No hesitation. Actually, that little red dash, I think, is the 200 MA on the weekly. You even went through that, blew through the 20 and the 50 like they weren't even there. So the gig was up down here. This was the market knew, the smart money knew. my mind. But, you know, daily, big green candle right off the 20 MA. Today's candle, anyways. Where does it go from here? I don't know. Got to keep condensing our chart so that we can look to the left to see what it might be looking for. So, you know, as price took out this high, you have to go and say, okay, let's look to the left to see what we can find. Taking out this level here, we're looking up here. You know, look into the wicks and the top of these two candles from December. That's kind of what it's looking for. And if it's the fade, right? Let's take the candles off for a second. So here, you know, you got your top of your candle up here. If it fades, it's going to fade back to the T line or the 5 EMA or the 20. Right? So don't be alarmed, because this is going to create a volume gap. So when price eventually comes back, you know, you might get a few green candles here, right? Let's just make some assumptions on the daily. You might get a few green candles. This is going to create a volume gap, and when it comes back to retrace it, this is the fairy dust and air stuff that doesn't necessarily hold price up on the retrace. So we already know, like, if you have an opportunity to short this where you're trading, you're probably thinking, I want to short with this rollover. And you just have to be patient for it to come, and you know that it's going to want to just come back to a reasonable level. 5 EMA, T-line, 20 MA. Because this is where it gets its continuations, right? Off the 20. Price moved up. People were looking, oh my God, look how overbought it is. It's going to crash. Continuation off the 20. We'll have to see. But it will come back. But it's a big green candle today. There's no question about that. Not at all. We look at the US dollar quite a bit. This is the, doesn't like the volume profile. You know, these are some ranges that, you know, I've had on these charts for a while. And basically what we're doing on the daily is we're bouncing between the 20-day and 50-day moving average today, anyways. You look at it on the weekly chart and you can see how much of a move down this has been. But again, impulse down, sideways movement tells you that it's what? Bearish, right? Because what if you want to have any bullish influence at all, you would expect a snapback in this candle to at least test the 50 and the 5 or the T line or something. But nope, that's not what we get. Impulse down, sideways, sideways, ooh, you know, you tickle the 5 EMA and it runs away. Downtrend continues, but the chart was telling you that. You know, look at the tests of the 20 with these wicks, right? And it just fades. So we shall see. This is the 10-year on the weekly. Let's look at it on the monthly to see. So you're basically sitting on the 20 on the monthly. So we've gone sideways, basically with the 20 acting as its primary support. That's 5%. There's a double top of 5% back from 2007. There's the 1000 MA, that was what it wicked. Here's the 1000 MA. There's the 500 MA on the monthly. And by the way, that is 84 years of price history on a monthly chart. That's what the 1000 MA represents. So If you fail the 20 on the monthly, you come back to the 50 on the 10-year. But if you hold it, then you start to break through these levels. You reach for 5 again. So our job is just to know where price could go and then be prepared for it when it does move. That's it. Anything else I missed? Thought I nailed everything today. Here's Xanos Daily. Again, big green, big heavy candle, but what is it sitting on? It's so far it's sitting on the 5 EMA. This thing actually hasn't produced a sell signal since it took the buy on the 28th of July. So it's had a nice run up. Anyways, there's some green on the screen today. Anything else, guys? If not, we will close this down for today and come back and regroup on Thursday of this week at noon. And my guess is that there is going to be lots of drama in the markets between now and then. And as we get a chance to look at it, we'll make it all make sense so that you don't have to be freaked out by what's going on around you. Maybe before we go, we should just take a look at the Dow quickly and maybe the S&P just to get an idea of where we are, right? We're trading above the 20, the 50, and the 200. They're very bullish charts, obviously, but there's still a significant amount of volatility, I think, in the market. Let's take the noise out and go to the weeklies. So if price was to pull back on the weekly chart, would you say the 20 MA and the 50 MA, which are tied in together here, a reasonable destination? Absolutely. Right? Absolutely. But it's still a bullish chart. The divergence between the T line and the 5 EMA is still intact. So we can't say that the end is near. Volume profile works here on SPY, or on SPX rather. So you can see that this is light trading. So there's not a lot to hold price up if it wants to come back and test it until it can fill it in. There's your 200 way down here at 4,800, which sounds bananas right now at 6,400. So, but it's just a chart. Still bullish chart. That's all we can say. We're trading above these levels and we know what that means. So we certainly can't be surprised. These are the Qs. Qs are doing the same. Very bullish charts. And these are weeklies. Just remember that when you come back to test these levels on the retraces, they can feel uncomfortable. And they can create all kinds of crazy talk. Is all we need to do is make sure. I'm going to share a trend spider chart here for 1 second. And this is the weekly. Now, the anchored VWAPs I absolutely love on TrendSpider because they are very, very good draws for price. Like, price respects them a lot. Basically what they're telling us is that this is essentially a bit of a premium. This is the anchored VWAP for price. This is the anchored VWAP for volume. Upper value range, lower value range. And on TrendSpider, the volume profile gives you a VWAP as well. So VWAP is telling us it's volume weighted average price. So based on that basis, we're paying a premium up here. I don't want to pay premiums. Still a bullish chart. Are traders making money? Yes, but you need to be able to understand what's going on behind you so you don't get hit by something you didn't see coming. If this is to retrace, like these for me as a technician are areas that I would keep an eye on for price to revisit. This happens to be just in line with the VWAP, right? And all that stuff is meaningful because they're draws for price, right? They're mathematically cued, in a sense, to return to those areas. So, until Thursday, happy trading. If you have any questions about setting up your charts or what's going on them, you guys know that you can reach out to me anytime and we'll get it all straightened out for you. If you're interested in looking at TrendSpider, I would suggest you try one of their free trials. If you want to sign up, you can get 25% off with BL25. That's our code. But I would suggest first just setting up a free trial with them, and they'll actually even help you try and understand how to operate your TrendSpider platform. Of course, I can do that for you too, but I really like it. It's probably the biggest competitor to TradingView. TradingView is still the leader. There's no doubt about that. It has a lot of penetration, but try TrendSpider out for some cool features. It's a lot of AI built into it as well, and I find them just clean, accurate charts. So I subscribe to them both. But I hope you guys have a good week, and again, we will see you on Thursday afternoon at 12 o'clock, or as close to it as we can. Have a great day.